The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Juliana Tatelbaum here with Karen Cho this morning, and these are your headlines. The U.S. and China agree a framework trade deal ahead of President Trump and Xi Jinping's meeting this week, a move Treasury Secretary Scott Bessent says will help avoid further tariff escalations.
President Trump gave me a great deal of negotiating leverage with the threat of the 100% tariffs on November 1st, and I believe we've reached a very substantial framework that will avoid that.
Equity markets gain on the prospect of easing trade tensions with Greater China well in the green. While on Wall Street, the Nasdaq is poised to open around 1% higher.
France avoids a hat trick of rating downgrades, but Moody's does revise its outlook to negative, citing political turmoil and ongoing deficit concerns. Meanwhile, Novartis snaps up US biotech firm Avidity in a $12 billion cash deal, the Swiss pharma giant's biggest acquisition under CEO Vas Narasimhan. Good morning, everyone. Nice to see you again. It's been a couple of weeks.
I know. It's been a while. Great to have you back on set.
Thank you. I think one of the big takeaways from my travels in DC the other week was that we're still talking about the tariff uncertainty, what that could do for the macro, big super cycle offsetting some of the downdraft, that being the AI story, and all really comes together in what we're talking about this morning, the US-China negotiations, a framework agreement getting towards, again, some sort of reduction in trade tensions. But like every other trade deal, we've been marched in a certain direction around the fear factor. If we don't get a deal, what happens this time? It's around rare earths. And of course, we've still got the super cycle playing out around AI and all the earnings that'll be rolling across the tape this week from the Mag 7 stocks, or the big tech names at least. It will give us a glimpse into whether that AI super cycle investment is enough to compensate for some of the other negatives.
It certainly does feel like right now there are more tailwinds than headwinds for markets. And I think part of it is also the fact that on Friday we had a inflation report, which is supportive of the Federal Reserve cutting interest rates again when they meet this week, and then potentially further in the meetings to come. And that is obviously the backbone to the rally that we've seen, the notion that the Federal Reserve is going to cut rates. And now we've got this positive news, positive signal anyway, on the U.S.-China trade talks.
It's a lot of confident bets that have gone into the market in recent times on the hope that, look, the AI investment story is so mega you cannot miss out and it's going to justify these huge valuations. But in addition to that, you signal around the rate cutting cycle, cutting into what could be still a fairly strong economic story, not a crisis. Cutting into a crisis is one thing, but cutting into a growth cycle is what the market has been placing those bets in. So to me, it's a pivotal week this week, what we're going to get in terms of the detail.
It certainly is. Well, let's take a look at U.S. markets and where things ended on Friday. As mentioned, we did have that inflation report, which was supportive for risk sentiment. You've got the Dow ending about 1% higher. The tech-heavy Nasdaq led the charge. It was the tech sector that outperformed every other sector in the U.S. on Friday. The Nasdaq adding more than 1% and the S&P gaining about 0.8%. Energy was the laggard in Friday's trade. Over the course of the week, it was positive for U.S. markets overall. Now, in terms of Asian trade, the latest indication of where global sentiment is heading, very strong gains overnight. You got the Nikkei 225 up about 2.5%. The Kospi in Korea up 2.6%. Hang Seng and the Shanghai Composite also trading higher. Now, all of this, of course, as President Trump makes his way over to the region. He made his way over this weekend, and he'll make his way from Malaysia to Japan to South Korea throughout the course of the next few days. So a lot of focus on trade and what may come out of those diplomatic discussions. Now, in terms of European trade, here's the early look at futures. You've got gains across the board here as well. So really a global story here of risk sentiment improving over the last 72 hours.
Meantime, let's push on and talk about the China story, as President Trump says he believes the US and China will agree a trade deal after Treasury Secretary Scott Bessent said the two sides have reached a framework agreement for Trump and China's President Xi to decide on ahead of their meeting expected Thursday. Speaking this weekend, Bessent said he believes new US tariffs on China will be averted after the talks. Chinese officials said both sides reached a consensus on arrangements to address their concerns and agreed to finalize the details. Let's get out to Elaine for more. Elaine, we were just mentioning earlier the rare earth story and the restrictions we've seen there. It's been an issue not just for the US and China, it's been an issue for Europe as well. So there's a lot riding on the negotiations this week. What are we hearing so far around the framework and what could it lead to?
Indeed, Karen, a lot hangs on that, and we have signs of a thaw now ahead of the meeting between the two presidents. So China said the two sides had candid and constructive exchanges on a range of issues, from the port fees to agriculture to export controls, fentanyl, and also extending the truce yet again. And the U.S. side highlighted some similar issues. And here is what Scott Bessent, the U.S. Treasury Secretary, said about the trade talks.
President Trump gave me a great deal of negotiating leverage with the threat of the 100% tariffs on November 1st, and I believe we've reached a very substantial framework that will avoid that and allow us to discuss many other things with the Chinese. I think we will be able to discuss them helping us get this terrible fentanyl crisis under control. I think we are going to be able to discuss substantial soybean and ag purchases for our American farmers. I think we are going to be able to discuss more balanced trade. And I'm not going to get ahead of the two leaders.
Meanwhile, China's trade envoy Li Chenggang called for no more surprises. He said the shocks and fluctuations in China-U.S. trade ties in the past month is not what the Chinese side wants to see. And a state media commentary also said that head of state diplomacy, it wrote, is irreplaceable and that it is imperative to follow the consensus reached by both presidents. So Beijing's messaging here seems to be, let's stick to what the two presidents are agreeing on. So this meeting on Thursday will be critical in setting those terms. Now, analysts say it's still hard for both sides to reach a complete or comprehensive deal. And Nomura said they might only agree on a narrow set of issues. And that trade clashes between the two superpowers now are inevitable, the bank said, as a cycle of tension, escalation, and truce seems to be the new normal for U.S.-China relations now. And Chinese analysts have also described the relationship as they are fighting but not breaking up, Karen.
Elaine, thank you so much for bringing that to us. And it ties in nicely with other major deals that have been inked in the region. Now, US President Donald Trump kicked off a busy week in Asia by inking several trade agreements with key ASEAN partners and overseeing the signing of Cambodia and Thailand's peace deal. As part of the trade deals, the US will maintain a 19% tariff rate on Malaysia, Cambodia and Thailand, and a 20% rate on Vietnam, with exemptions for certain goods. The president also secured agreements with Malaysia and Thailand on rare earth minerals, as well as the US steps up efforts to diversify supply chains away from China. Let's get out to JP. He is live from Kuala Lumpur. JP, this is fascinating, the countries I mentioned with the trade agreements, because a lot of these nations, the US has been concerned about the transshipment of product through these countries from China originally. So just walk us through what we've heard.
Absolutely, Karen. Good morning to you guys out there. Of course, trades and deals and things to sign are what President Donald Trump was busy with when he came to what some are calling the most significant ASEAN summit we've seen in years, actually, because of the number of the deals, and also because a lot was riding on how you can simmer down a lot of these trade tensions that have really colored the economic landscape for the last couple of years. Here's what President Trump said with regards to what deals he was looking at and who he was dealing with on the sidelines, just to give you a flavor of how many discussions and talks he actually conducted on the sidelines of the ASEAN summit here in Kuala Lumpur, Malaysia.
Today, the Prime Minister and I signed a major trade deal between the United States and Malaysia, and together we took part in the signing of a historic peace agreement ending the hostilities between Cambodia and Thailand. We're calling it the Kuala Lumpur Peace Accords. The United States is for you. It's committed to a free and open and thriving Indo-Pacific. My message to the nations of Southeast Asia is that the United States is with you 100%, and we intend to be a strong partner and friend for many generations to come.
So the Kuala Lumpur Accords, Karen, it really expands this ceasefires agreed upon in July between Thailand and Cambodia to put to rest an ongoing border spat between the two countries that has resulted in border clashes over that time. And in fact, President Trump in July actually said that if there is no truce, there is no trade deals, which actually might have also forced them to come to that table. Now, speaking of these trade deals, you did mention a while ago the likes of Cambodia and Thailand facing 19% tariffs, and Vietnam seeing their tariffs remain at about 20%. But arguably the most interesting of them all is the one that they signed with Malaysia because of that caveat on that rule regarding rare earths exports, and that is to establish a supply chain that might, see Malaysia supplying unfetteredly rare earths towards the United States to serve its needs. Now, this is interesting because recently, a couple of weeks ago, Malaysia did affirm that they did conduct initial tests that might reveal potentially 16 million metric tons, that is, of rare earths within their ground. But they'll need to extract it. They need to find a way to actually process it, and thus also because of this, they will need to attract a lot of interest. But again, this gives them leverage actually to build more ties and to become more important, and also perhaps service the needs of the United States if it tries to wean itself away from the Chinese rare earth supply chain, which it dominates in such a strong fashion. So again, a lot of things riding on during the summit, and perhaps just highlighting that rare earths once again is front and center with regards to this trade war between the United States and China, Karen.
JP, while we're talking about Malaysia today, let me just ask the pressing question about the semiconductor industry there, because we know that it's been trying to build out an edge in that area. There's been a lot of investment that's taken place, and many had hoped that actually Malaysia might show some strength as a semiconductor player. Where does it sit now on the back of the trade deal?
Well, that's interesting, Karen, because we did speak to the Trade Minister, Tengku Zafrul Aziz, and asked him exactly that, because it seems that for the time being, some of the trade tensions and simmering of these trade uncertainties might have cooled off on the ASEAN summit. But he did say that the uncertainty of the last couple of months did set back their own industrial master plan, which involves transforming their semiconductor sector and moving up that value chain, actually, and thus more work has to be done. But for now, they're also on standby because, again, the more important thing that many people in Southeast Asia have said is really those sectoral tariffs, Section 232, which could potentially see more tariffs levied on certain critical items such as semiconductors. For now, it doesn't seem to be a concern, but again, as we've seen before, expect the unexpected when it comes to the Trump administration, and they will not be surprised if this suddenly rears its ugly head up again, and it has to be something that they'll have to discuss with their counterparts. But for now, at least, they can breathe a sigh of relief, just one, that is, because of a lot of the agreements that were accomplished on the sidelines of this ASEAN summit.
JP, thank you very much for bringing us a full rundown of the latest there.
Meantime, President Trump says he will hit Canada with an additional 10% tariff after an advert launched by the Ontario provincial government, which used quotes from President Reagan to criticize tariffs, aired during the first game of the Baseball World Series. The advert edited a speech given by Reagan, correctly reflecting his defense of free trade, but omitting part of the speech where he explained his decision to impose tariffs on some Japanese goods. On Truth Social, Trump described the campaign as a fraud and said it should have been taken down immediately. The Ontario government had previously said it would pause the campaign from today, but that airings over the weekend would continue as planned. Speaking in Kuala Lumpur on Sunday, Canadian Prime Minister Mark Carney did not directly address the ad campaign, but said that the Trump administration's tariffs and green energy policies would reduce trade flows.
Naturally, trade is going to shift away. By definition. The other reason is from the U.S. for a period of time on that. It's also shifting because it's more expensive to trade with the United States. That's what a tariff does. The United States is the world's largest, is the most dynamic economy. It is a source of constant innovation, and everyone, very much Canada included, is going to want to be active.
Well, I can certainly say that this triggered a lot of conversation over the weekend, I think, in many parts of the world. The fact that President Trump was so irked by what was basically a provincial government ad using Ronald Reagan's real voiceover. This was not doctored. This was not fraudulent. But there is some debate around whether the comments were taken out of context or not given in full. But nevertheless, I think what really bothered President Trump, and Steve and I talked about this a lot on Friday, is the fact that it came across rather sensibly, Ronald Reagan's critique of tariffs, and he is an iconic voice in the Republican Party. And if there is going to be a threat to President Trump in terms of persuading his voters that perhaps his policies are not ideal, it's probably going to be somebody like a Ronald Reagan.
Yeah, and I think the reality when it comes to Canada too, if we just bring that into the mix, the way that it's been negotiating with the US has been a more aggressive position than a lot of other nations have taken. And here we go back to, if you negotiate like that, you get punished. And the consequences are for American consumers too. Steel being one of the main inputs that everyone's looking at, and whether that drives up prices for big ticket items, refrigerators, dishwashers, those appliances that eventually you have to replace. Maybe you're not replacing them straight away, so you haven't felt any price increase. But eventually when you buy one, you do feel the impact of those higher prices. So I think there's been a lot in the mix around Canada. But it's just ironic given how the two are neighbours and allies and friends.
Yeah, and it's a huge part of the Canadian economy, and they're massively exposed to U.S. trade. I have to say, we're just discussing kind of jovially before we started this conversation. I think Mark Carney's probably a little bit grateful for Justin Trudeau taking some of the headlines over the weekend. If you Google Canada right now, I'm not sure what your top story is going to, if your top story is going to be this Reagan controversy.
It's definitely not. Katy Perry might come up more frequently than Reagan. So.
The hard launch certainly grabbing headlines over the weekend. All right, coming up on the program, U.S. CPI comes in softer than expected in September. We'll discuss the case for cuts after the break. Plus, Moody's issues a warning on France, but spares the country yet another downgrade. More later this hour. And don't miss our coverage from the Future Investment Initiative. Dan is going to be joining us live from Riyadh. Welcome back to the program. Here's a look for you at U.S. futures. We're looking at strong gains across the board. So it seems like investors across the world are encouraged by the positive signals coming out of the U.S.-China trade talks over the weekend as we brace for that highly anticipated meeting between Presidents Trump and Xi coming up in South Korea later this week. So right now, the Dow looking at more than 300 points, the Nasdaq looking at almost 300 points, and the S&P also looking at a move higher at the open. Now, all of this also comes after the U.S. CPI grew at a softer than expected 3% on the year in September. That's according to data out on Friday. Economists had forecast 3.1%. Core inflation also came in below expectations. The data, delayed due to the U.S. government shutdown, cemented expectations for a Fed rate cut this week, with markets now pricing a 96.7% chance of a move lower, according to LSEG data. Rupert Thompson, chief economist at iBoss, joins us now. Rupert, great to have you with us. Let me get your take on what seems like a major rally across global equities. We're looking at a strong move higher in U.S. futures. Asian markets off to the races. European futures also look stronger. To what extent is this tied, in your view, to the positive signals on the U.S.-China trade front versus the cementing of those rate cut expectations for the Fed after that soft CPI print on Friday?
I think it's more to do with the positive news on the trade front. I mean, in terms of the CPI, as you've sort of said, all it really did, it came in a fraction better than expected, and it really just cemented expectations of rate cut, which, even before that, everyone all thought it was virtually certain they're going to cut rates. So I think it's the trade news which is the positive one behind the latest rally.
And what is your view on the trade news? If we do get a confirmation of what was agreed over the weekend by Presidents Xi and Trump in South Korea, how long-lasting, how impactful is this likely to be for the two economies and for the market moving forward?
I think it certainly kicks out into the long grass, a sort of big flare-up of trade tensions again. And almost certainly, if this does go ahead, it means the trade truce will continue, possibly for longer than the sort of 3-month period which has been the norm so far. But does it mean you're going to get, it's an end to the occasional flare-up of trade tensions? I think it doesn't. I mean, it's good news short term, but, just the news on Canada, 10% tariffs out of the blue, as it were, shows that, President Trump is fairly fickle on these matters, and it doesn't sort of alter the fact that, you've got this geopolitical, geostrategic tension between China and the US, which is not going to go away. So sure, it's good news, and certainly it means that the favourable tailwinds behind the markets at the moment have got another leg to them.
To that point, and we were discussing it earlier, we've still got enormous uncertainty, and the whole conversation since the very beginning around tariffs was that if the uncertainty continues for much longer, then it's very negative for the world economy. And the uncertainty, let's face it, has continued, and it continues right throughout the rest of this year and possibly going into next year as we continue to talk about these trade issues, none of which have been solved. We think they're solved, then suddenly they flare up as an issue yet again. However, we've got the strong tailwinds coming through from the AI super investment cycle and potentially the Fed cutting here. So someone's digging a hole and someone's building a bridge over that hole at the same time. How do we think about where this lands for the world economy?
Well, the way I think the markets have sort of pushed that again into the long grass. For the next 6 to 12 months, whereas at the beginning of the year everyone was worrying about recession, now no one is worrying about recession. And the business confidence numbers you had out at the end of last week for the US, UK and Europe were all sort of reasonably okay. So sure, down the road, it may all end in tears because the Fed cuts rates too much, inflation picks up, bond yields pick up and all the rest of it. But for the next 6 months, it's pretty hard to see, famous last words, a big sort of negative shock coming out of the blue. And that's why I think, markets could continue to move higher. The one big proviso, which again, the markets are ignoring for the moment, at least at a global level, is valuations. A lot of good news, not just in the AI area, is now priced into the markets. I mean, one striking number is, if you look at global equity valuations, the price earnings ratio is around 20 times, which is around 30% above its long-term average. So a lot of good news is already priced in.
That was one of the warnings from the IMF the other week about the valuations, whether they could be too extended at this stage. One of the other big points for discussion is whether we're looking at some issues now in the banking system. And we've been talking about some of the regional banks, and there was a fright in the markets a couple of weeks ago. Last week, a lot of those bank exposures just bounced. We saw the KBE bouncing about 3.5% over the trading week. What do you make of some of the warning signals we've already had that some of the lenders, there's not been suitable due diligence, that we're seeing a ramp up now in some of the exposures, some of the liabilities that came through in banking season? Is there a red flag for you?
I think there are. Definitely there's, well, to quote sort of Jamie Dimon, once you've got one cockroach, there's going to be a few more cockroaches lurking around. But, and I think there's a big but, while the global economy continues to expand, while the Fed continues to cut rates, that is fundamentally a positive backdrop. And what it means is these sort of problems at the edges are not going to turn into a systemic problem. That is the big difference between sort of the GFC and the run up to the GFC, when the Fed was jacking up interest rates and you had a big slowdown. Neither of those seem to be happening at the moment. So sure, I think there will be more cockroaches out there, but are they going to lead to a sort of long lasting fall in the markets? I guess they won't.
Rupert, when you talk about the risks out there, you mentioned valuations, and I used to do be in equity research, and we were told valuation is not a catalyst. That's not enough to drive an investment case for a stock. So what could be the catalyst to trigger a reassessment of valuations and trigger a sell-off? Yes, certainly take your point, and to Karen's point as well, that we're hearing warnings left and right about valuations, but that's not going to be what ultimately derails it. There's got to be a trigger.
I completely agree. Obviously, in terms of where valuations are most extended, they are in tech, in AI, and in the US. And we've obviously got sort of 5 of the Magnificent 7 reporting this week. And I'm not saying that's going to cause sell-off, but clearly the pattern up until now has been that the Mag 7 have beaten expectations substantially. So the question this week is not that the numbers are going to be good. The question is, are they going to be significantly better than expected, as has been the case consistently for the last couple of quarters? The other point in terms of valuations is not so much are they going to cause a big sell-off or not. They have been important this year, even though they haven't caused a big sell-off, because what they've meant is that investors have moved away from the most expensive market to the States to the cheaper markets. And actually, those markets have outperformed. And the reason why they've outperformed is because of valuations, I think. So valuations, I agree, not the be-all and end-all everything, but they can be important.
Rupert, let me turn to the UK. I was talking to the Chancellor of the Exchequer the other week, Rachel Reeves, and she didn't really buy the argument that people are upping and leaving and going to places like Dubai, trying to escape what seems to be a fairly dire picture here. The weekend press, again, loaded up with more pain yet to come through the budget, whether we're talking about broad-based tax increases. Another conversation I had in DC was with a senior banking advisor. He said to me, look, the biggest issue for financial stability is growth, the lack of growth. And that seems to be missing from a lot of the dialogue, that we need to find that growth plan. What do you make of the prospects for the UK economy, and what are you most concerned about?
So the Labour government means well. They are trying to boost growth, but even before sort of the setbacks they've had in the last few months, the big point everyone was making was that, you can't turn growth around in short term. So all the sort of measures they're trying to put in place in terms of cutting back planning regulations and all the rest of it, sure, on a 5-year horizon, 10-year horizon, it's meaningful, but it is not going to boost growth short term. And I think the prospects for the UK are very much continued sluggish growth, which has been, we had sort of 1% growth, give or take, last year. This year, and probably going to get it next year. The budget is going to be a drag. I mean, whether Rachel Reeves has to raise taxes by 20 billion or 30 billion, I'm not sure. That still represents a drag of sort of possibly up to 1% of GDP. The bank is going to be cutting rates. And if we do, when we do get past the budget and then sort of we finally know what tax increases are going to happen, maybe confidence will improve a bit. And the savings rate, and it's the weakness of consumption, which has been the major drag on the economy, maybe that actually will ease a bit. So my guess is it's going to be a continuation of the same, continued sluggish growth, and then down the road, maybe some of these structural reforms will start to boost growth.